I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout the show. I'm going to keep my comments brief today. As you could hear, my voice sounds strange. This is actually the 15th day for me of testing positive for COVID. I took the Paxlovid drug, and that did make it go away, and I tested negative for a few days. But now I am rebounding, which is what about a third of the people that take this drug do. So that means that it just delays it and you get a longer case of COVID-19. And that's what happened to me. So now it's just like a big head cold, and I'm starting to feel better. So brief comments today from me. The stock market this week had a choppy week in a relatively narrow range. There was a battle between earnings reports that pushed stocks to the upside and a hawkish chorus out of Fed heads who were sending the message, don't interpret Powell's latest comments as being anywhere near the end of the rate hike cycle, or that the Fed has even reached neutral. That hasn't happened yet, and they're sending out that message. Still, it was apparent that there were buyers around, and every dip is quickly bought up, as we have seen throughout this week, and very much like Friday, after that employment number, when bonds got crushed on very strong employment numbers, and the stock market just would not give a lot of ground. We saw the S&P 500 down over 30 points twice, and then the buyers come back. So very strong market right now, and it's very clear there are buyers there. And our analysis has not changed. We see that after a little dip here in early August, we expect that the market will continue to the upside and move up into sometime like the second or third week of August. So more like the third week now. That rebound is likely and more likely even to continue to the upside because of this small little window that's left for a pullback based on our work. We thought it would be deeper, but the market is sending us a message. And then after that's over with, as you get towards the end of August, into September, October, we'll get into that period of bigger risk. And I'll talk a little bit more about that towards the end of the show. Stocks for the week, slightly higher. Bonds, the 30s down about 3 3/4 for the week. And at the same time, 10-year yields up 11 basis points, up to 3.09. Gold market, it gained about $7 or $8. It was better and then gave back today as the bond market fell. And the silver market, which was up huge last week, gave back 52 cents this week. The dollar up about 0.7%, money being attracted into it as the interest rates pop back up here. And we see some strength ahead for the dollar now. And it might actually test the highs that it made over 107 in a few weeks. It made our downside target under 105, and now we think we're entering into a short-term positive period. Oil market totally collapsing here, down over $8 on the week, even closer to $9, and that was in line with our analysis. We thought it would be falling down, and our target right now is about $86, and there's about another 1 to 2 weeks of time left in our analysis for this decline in the oil market. That's going to be my brief comments today. Coming up in this show, Arby's going to preview a member video, short-term trade planning, and he's going to give you a great look at a long-side setup in Nike. And he's going to use, of course, the askSlim cycle analysis to guide you through that. Katie's going to show you her new segment, Trade Planning with Options. And this is combining cycle analysis with option strategies really super valuable way to raise your probability of success. And then Matt's going to bring you this amazing reveal of our content and how you can get that for free. Don't miss this segment. It details the Popular Services Preview, which begins today. It's 3 weeks that you could get our best, most popular services just to look at. We want you to sign up afterwards, so we're going to make it very easy to get in. You just do an easy sign up, no credit card necessary, and you'll see great stuff for free. And Matt's going to show you what that looks like. And then I'll come back and I'm going to give you a brief look at the short-term view of the S&P 500 and what happened to that early August dip that we were looking for and how high will the rally go. Remember, go to askSlim.com, look around the site, and that free preview is coming up now, 8/5 to 8/26. You can sign up for that just by going to the top of the page. You'll see that sign-up link, and it doesn't cost you anything to sign up, no credit card, so please do it. I mean, there's no reason not to. If you're on YouTube, subscribe to our channel, click the notification bell, and do like this video. Give us a thumbs up. On Twitter, follow us at askSlim, and any questions on anything that you're going to see here, write to Matt at askSlim.com. This is a preview of a member video. Ari does this every couple of weeks where he puts a whole bunch of stocks together and looks at short-term trade planning. And it's just an incredible learning piece on how we look at our analysis and do raise the odds of being successful in trades. And he's going to bring you that on Nike right now.
So this is Nike, and this is obviously in a much more bearish pattern overall. You can see we have lower cycle lows, lower cycle highs here, and this low formed a little bit early, so that's why we've added in this blue cycle here, which just basically indicates that the low formed just a few weeks earlier than what we were looking for. And we are now in this rising phase in this overall bearish pattern. So the base case would be for a move into these zones from 115 to around 124.5, and then we'll be watching for this to fail and roll over. If this were to get through that level on the upside and then get up to this 78.6, then we could look at this as a possible basing cycle on the weekly time frame. If we look at the daily, here is the short-term idea. So what we're seeing here is just a mild upturn, and then looking at this as a higher low and a higher high that's likely forming versus that old high. So this is the draws that we're looking at right here. So you can see higher lows, higher highs throughout this process, looking for this to just form a new higher high here in this short-term rising phase that we are in the overall context of a nice base that is in all likelihood forming in Nike. The levels are rising. They come in from around 111.35 to 109, and we don't want to see this below the minor 78.6 at the $107 level. Targeting a move to the short-term 78.6 at 118.26. If it gets through there, we have the prior cycle high at 123.82. So those are the levels on the upside and downside in Nike, and our next low is due on the daily time frame, 819 to 829.
Brilliant, Ari. That was really great work. This is a new segment, Trade Planning with Options. We have Katie, who's going to combine our cycle analysis with quantitative option strategies. I used to do a show like this when I was on Tasty Trade, and people loved it, putting together our style of analysis with quantitative analysis, and it would be really a great show that we would do. And now Katie is bringing that all together right now, and I think you're going to just love the way that she presents and teaches this information. Show them, Katie.
Hi, this is Katie with askSlim. This is Trade Planning with Options for August 4th, 2022. Today we're going to demonstrate an options trade in Chevron. Let's look at the chart analysis. This is a 5-year weekly chart of Chevron, and there are a couple of important things to note. First, Chevron made its intermediate low here 3 weeks ago, and we're now moving up into the rising phase of this new cycle. Now, because Chevron retraced so deeply in the declining phase of its prior cycle, the probabilities favor not being able to make a new high in this new cycle. So we're projecting up into this area between the 78.6% fib retracement and that prior cycle high. Another important thing to note is momentum. We use our proprietary reversal scout on our weekly charts to show momentum, and when the reversal scout turns green after a cycle low appears to have formed, that helps us to confirm the rising phase of the new cycle. Notice that the reversal scout has turned green here. And finally, I want to comment on the red dashed cycle brackets on the bottom here. That's the weekly cycle bracket for crude oil that we have overlaid on this chart. Crude oil is due to form an intermediate term low right around now. If we take a look at this weekly chart of crude oil, you'll notice that we are right in the middle of the timing window for that to happen, but there is no sign of the bottom being in yet. So that weakness in crude oil might prevent Chevron from taking off to the upside. Now, let's go back over to Chevron and switch over to the daily chart. So this is the daily chart of Chevron. Notice that we have positive momentum in this shorter time frame as well. Both the reversal scout as well as the slim ribbon are showing positive momentum. Now, timing wise, we're approaching this daily cycle timing window when we would expect the current cycle to make its low and then to turn back up into the rising phase of this next cycle. Now, that time period runs from August 5th to August 15th. So what we're looking for is for Chevron to hold this support zone between about 152.40 and 144.80, and then to turn back up into the rising phase of that next cycle, but maybe not get an explosive upside move due to the current weakness in crude oil as it tries to form its intermediate low. Now, if that does happen, we could see crude oil gain strength, and that will benefit these oil and gas stocks as well. So some of the evidence, positive momentum in Chevron across the board, early rising phase of the intermediate cycle, retracing on time into the daily cycle timing window, showing good relative strength against crude oil weakness. Now, this all suggests a neutral to bullish directional bias into the beginning of September. The reason I say the beginning of September is because crude will likely form that intermediate low and start moving up, and then these oil and gas stocks could become more bullish and less neutral. Let's go over to the Tastyworks platform and pull up Chevron. These are the available expiration cycles, and the implied volatility in here is around 36 to 37% with an IV rank of 53. Now, if we choose the September 16th monthly expiration, that gives us 43 days to expiration. Let's go in here and we're going to set up a big lizard. This is a neutral to bullish strategy that matches our directional bias in Chevron over that time frame. Now, a big lizard strategy is set up by first selling the at-the-money straddle. Our credit collected is $14.05, $14.10. So what we're going to do now is take that amount and use it to buy an out-of-the-money call. We want to choose a call that allows for our final credit collected to be greater than the width of the spread that we create. So, for example, our collection on the straddle is $14.05. We know right away that we can't choose the 165 call. That would create a $15 wide spread, and our credit collected won't be able to cover that. So let's go and choose the 160 call. That gives us a $10 wide spread, and we collect $10.60. Setting it up this way ensures that we have no risk to the upside if Chevron does take off. Here is the risk graph. No risk to the upside, and our break even on the downside is at 139.40, which encompasses all of the support zone on the daily chart that we expect Chevron to hold, including the 78.6% fib. Now, if you want to make more than just $60 if Chevron does take off to the upside, there are a couple of modifications you can make to this trade. If you'd like to learn more about those, please visit our website at askSlim.com.
I just love that, Katie. You're really great at this, and I would love for everybody to comment and let us know if they want to see more of this, and also how much they enjoy getting this kind of instruction. All right, that's it, and now we're going to move on. This is the Popular Services Preview, and Matt is going to tell you all about it right now.
Hello, fellow traders and technical analysis enthusiasts. This is Matt with askSlim. As Slim mentioned last week, we are excited to announce that access to our popular services preview starts today. In this segment, I'll be providing a brief tour of the premium services available as part of the PSP Open House. Okay, let's head over to askSlim.com and have a look at the sign-up details and where you can learn more about the services that are included. At askSlim.com, on the home page, you'll see two links, one here and one here. Simply click on the links to access the form that you need to fill out for the PSP. Once you get to the landing page for the PSP, fill out the form. Once you've completed filling out the form, you will receive an email with your username and password. Also, if you are already a premium member of askSlim, you will automatically get access to any of the additional services as part of the PSP. The PSP will give you access to an amazing assortment of our services and provide you with a deep dive into the askSlim technical analysis methodology. The services included in the PSP support traders of all styles, from intraday to short-term swing traders to intermediate, multi-week, and multi-month position traders. After you receive your email with your username and password, you'll be able to log into askSlim.com and have access to the popular services preview dashboard, which will contain all of the services and content available during the free preview. All right, let's take a look at how this is organized in a few of the services. In this first section here, you see our trade planning hubs. Within the trade planning hubs, we have our askSlim focus list of weekly and daily cycle analysis on 84 of the best traded stocks, ETFs, and futures. You will have access to our weekly and daily chart analysis, as you see here with McDonald's, technical details, directional bias based on our intermediate cycle timing, cycle low dates, anticipated cycle low dates, weekly key levels, and daily key levels as well. We have this both for our equities and ETFs as well as our futures. So you'll have an excellent overview of our 84 of the best traded stocks, ETFs, and futures that we do our analysis on. Also included in our trade planning hubs is the cycle low timing tracker service that we have available, which is relatively new. It helps you keep a pulse on when there are periods of likely higher downside risk and also be able to stay alert to when bottoms are forming and continued advances are likely. In our technical reports and video analysis and chart stream section, you'll have access to the SIR daily snapshot, which is designed for short-term index swing traders looking for daily technical insights into the S&P 500, NASDAQ 100, and Russell 2000. You'll have access to our 2-hour daily and weekly charts and our price projections that we outline both for the upside and the downside. Our Future Speak show, which is produced by Arvi on a weekly basis. Professor Arvi uses our askSlim proprietary cycle analysis methodology to review the charts on 24 markets and indexes, the major indexes, energies, precious metals, Forex, bonds, VIX, Bitcoin, and Ethereum. You'll see Arvi provide short-term and intermediate outlooks with insights into directional bias, key price levels, and important timing windows. Also included in here are two of our chart streams, one for the SPX in a multiple time frame look, which I'm going to show you right now. You'll be able to capture a snapshot of the key technical insights at any moment of the trading day. You'll see our broadcast with our custom askSlim proprietary indicators and studies at work at multiple time frames. You simply press the play button and you will be able to see our chart stream. Additionally, we have a chart stream for intraday traders, which is our SIR intraday broadcast. You'll have a look at the key levels for the S&P 500, the NASDAQ, and the Russell, key support, resistance, breakout, and breakdown acceleration zones. In our trade planning and trade ideas and systems area, you will have access to our trade ideas, which is designed to support your trade planning process. We believe trade planning should be an important step in a trader's process. For this reason, accompany each trade idea will be our template, which shows the essential components of a trade plan, favorable entry ranges, target zones, and suggested areas where the idea will likely need to be reevaluated. It's an excellent way to understand our process and how we get to a trade idea. Furthermore, you will have access to our Slimulator rankings system. The simulator ranking system has been developed as a trade planning tool designed to support investors, swing traders, and option traders. It's programmed with our proprietary cycle and momentum analytical work for 84 of the best traded stocks, ETFs, and futures. You'll be able to see these symbols ranked from most bullish to most bearish. It is a very easy and simple way to understand the conditions of our focus list. You'll simply be able to click on the directional bias sort here, and you'll be able to then find those symbols that are setting up as most bearish to most bullish. In our final section here, you will find our replays of the askSlim Market Week show and our askSlim live events right here and right here. Oh, and as a bonus, you'll also have a behind the scenes look at our askSlim community Discord server, which that has been recently launched and continues to expand. For the duration of a trial, you will have a behind the scenes look and through a view only, and you'll be able to still see what goes on between our members and the askSlim team. It's a fantastic way to get a feel for what's happening and connect with our analyst team. As I mentioned earlier, this is an incredibly comprehensive mix of services that we're excited to share with you, and it supports a variety of trading styles. There's a ton here, and that's why our open house is for 3 weeks. And don't worry, we have a robust resource section and plan to have live educational webinars during the PSP. That's it for now. Make sure to sign up at askSlim.com and enjoy the PSP. Take care and great trading.
Wow, Matt, that was really comprehensive. Great job showing all of that. There's no reason for people not to sign up for this right now. It doesn't cost anything and no credit card, and it gives them a great look at all of the great stuff that we bring. Of course, we want them to become premium members, and that's why we're letting them see it all at absolutely no cost. So thanks for showing that. All right, this is going to be a quick, brief look at the short-term view of the S&P 500, SPX. We're going to look at the 1 to 3 week view as we look at this on a daily chart. Then I'm going to bring you a little look at the Futures Hub where you can get all of the analysis. So this is SPX. We had been looking for a corrective period in August, and that would be while these 2 cycles in here are nesting. Normally when you get this type of action, you get corrective periods. You can see that right in here where both of them were coming down very significantly at that point. And if I go a little bit further out, you can see how each of those yellow zones, those are the periods of risk, brought sizable declines. Now something has changed, and this cycle in here is swamped. Now what swamped means, and you can see that word right there, swamped, is that the upward momentum conditions are so strong, especially on the intermediate chart, the weekly chart, joined with the slim ribbon, which you can see here is still widening and strong, that the momentum conditions are so strong that it does not allow the correction to come. I actually didn't think it was going to be this strong, and it did get over what our original projections were, this 1053 level right over there. Getting up significantly more than that. And now this correction, as you see right in here, is nothing but a sideways movement going on. Now there's still a couple of days that it could get sold in here, and we're looking at maybe a worst case around that minor 23, which is about 40.75. I don't think it's going to be worse than that, and it could be a lot better. You could see the slim ribbon coming up, which often gives support, and that's coming up to that same area also. So this corrective period in here is turning out to be, well, really nothing. And certainly for the shorts, it's been a challenging period. So what I would expect, based on what we see in here and what historically we see under these type of formations, is that the market will finish this corrective period and maybe in this sideways chop and then begin to move up again. Now, if you caught my big picture analysis, looking at past bear markets, we talked about the fact that it was likely going to make it up to the major 50% in this rally. That's right over here. That comes out to about in the 42.40, 42.60 area right in here, and it's likely to get that rally. Now, we look at the VIX, and the VIX is telling us right in here that based on the timing for the troughs in VIX, in other words, the low timing for VIX, that comes out to a peak in the stock market out over here, which is somewhere in about the third week of August. So that's why we're pointing out over here to somewhere between maybe 819, 825 to be where the peak of that next rally is. And we would expect it to get up to that resistance level at the major 50 in that area of somewhere plus or minus of 4250. So that would be really what we're looking for. Then over here you could see this big harmonic family. That points to joining up with weekly corrections that go out into September, October that we talked about. If you want to see the analysis on the longer term and all of our analysis on all the commodities and all the indexes, you can actually do that by going to our Futures Hub once you become a Popular Services Preview member, which is free. Arvi talked all about that just a few minutes ago. If you're only watching the video clip here on the stock market on YouTube, please go back and look at the whole show, and you'll be able to see Arvi present everything you can have for free for the next 3 weeks. I'm going to show you right now the Futures Hub right over here, which has the analysis on indexes, treasuries, currencies, metals, energies, grains, and soft and crypto. What you're looking at in the colors that you see in here are the intermediate market conditions, the sum of the evidence. And you can see in here the indexes are still negative when you look at that. The only thing really positive in here are the bond market and the crypto market there, and soybeans have now turned positive. So you can see that. And there's negative market in the U.S. dollar, Aussie dollar, the British pound. So I'm sorry, the U.S. dollar JPY. So let's just look here at the S&P 500, and if I click on here on the indexes, you'll be able to get all my past notes right there. And if you click on S&P 500, there's that weekly chart. You can view larger, you can just blow that up and see the analysis over here that we talked about getting back down under that 36 level and potentially down to 3,500 or lower. So a lot of you have written to me, well, what happened to those lows? Well, those are intermediate lows, not short-term like I just presented in this video. And those come out into September or October. You can get that daily chart that we just showed. And if you want to see the video analysis, it's right over here that Arvi presented in FutureSpeak last week. So you can always get that. And you'll be able to get the next 3 FutureSpeak shows by becoming a PSP member. You get all the technical details, the directional bias, which is neutral, the cycle low dates, and the weekly key levels in here. All of that is in here for free. And Level 4 members get our live TOS link, but you won't be able to get that in this free preview. So there's the weekly chart if you're looking at it, and if you want to get a good look at that and all of the analysis on all of these features, all you have to do is become a free member on the PSP, and you'll be able to get that. So back to the daily chart here in the S&P 500, summing it up, this is an extremely strong market we're looking at. Momentum conditions strong. It's using up the corrective time, and it's likely after potentially a couple more days where it could decline, where it's so strong in here, I don't know if that could happen, then we'll be targeting that 4250 area up there later in August. That is the short-term view, and I hope you found that really valuable, and do become a free Popular Services Preview member just by signing up on the main page at the askSlim.com website. That's that Popular Services Preview right there, and everything that is available to you for free for the next 3 weeks. That's it. Please go to the askSlim.com website, explore that, and do sign up for the free PSP. It starts today. On YouTube, subscribe to our channel, click that notification bell, and do like the video. Give us a thumbs up, and watch our member videos in the playlist. On Twitter, follow us at askSlim, and any questions on everything that I just showed you, please write Matt at askSlim.com.